Any explanation for why it came in, I guess, a little south of at least your expectations and some others, too?
Yeah, we shouldn't have upgraded, obviously. I think explanation is leisure and hospitality was weaker than we thought. The decline in December was not it, but we had another meaningful decline, and we also didn't get the boost in some of the other areas that we thought was going to come from seasonal factors. So the headline definitely on the weaker side in the establishment survey in the payroll numbers. That said, we did have a big increase in the work week. So hours worked in January were actually up pretty significantly. Temporary help services also up. So some of the more leading parts of the payroll report I thought were actually pretty encouraging, even though the headline number clearly weaker than expected, at least what we expected.
Right. The president a moment ago in the pool spray today said at the current rate, it will take 10 years to get back to full employment. He was responding to the jobs number. How would you advise viewers to separate the numbers and the trends themselves from obviously the legislative push that we're under, and in this case involves trying to highlight the risks in this print, not the upside?
Well, I would say that these numbers are very volatile. We've been going through a weaker period in the economy. The virus situation has deteriorated since the fall. That's weighed on the economy, especially in areas like leisure and hospitality. I think all of that is going to change in coming months. We're seeing the virus situation starting to improve, and the seasonals and the higher temperatures over the next few months, I think, should reinforce that trend. We're also seeing more rapid vaccinations that will also help. So I think we'll have a improved situation in terms of the virus, and that's going to have important implications for the economy as well. Fiscal policy is also turning much more stimulative. The president is making a strong case that we need to do more. We are building in a significant further package, not quite the 1.9 trillion, but we're at a little over 1 trillion on top of the 900 billion that was passed at the end of December. So I think there are a number of factors to expect a pretty sharp acceleration in growth over the next few months.
Jan, do all of those tailwinds that you outlined help bring people back into the workforce? About 400,000 people, civilians, have left the labor force. Is the snapback as quick in kind of getting them back into the labor force, or does that actually take some more time to filter through? And is there anything policy-wise that the government should be doing to bring people back?
Yeah, month to month, these kind of labor force numbers are, very noisy in the household survey, especially when you have this change in the population controls. That's sort of a structural break that occurs once a year at year end. But you're right that there's still labor force participation is still well below where it was prior to the pandemic. Employment is still very far below. There's still a very substantial amount of slack in the economy. So I'm certainly not saying that we're close to full employment or anything like that. What I'm saying is we're still in a pretty deep hole, but we should start to climb out of that hole quite a bit more quickly in coming months.
Shepard Smith here. Thanks for watching CNBC on YouTube.